Well, good afternoon, everybody. I hope you're well on this Thursday. G'day, Gigi. Hope you're good. And let me know if you can hear and see me okay, guys, and that'll be fantastic. We'll get things kicked off. Awesome. G'day, Ross. Hi, Chris. Thanks, mate. Good to hear all is sweet and barley, John. Okay, let's kick things off with the usual but important message. These are my opinions, not necessarily representative of Go Markets, and shouldn't be taken as such. And of course, we're looking at live markets, so please bear in mind this is for educational purposes only. You've got trading plans to guide your trading action from here. So let's get things kicked off. Now, one of the things that I promised to do was to go back through my process. So I thought I would do that right now and just let you know how I start off the day in looking at what's going on. So first place I always start is FinViz. So I'll check on what happened last night. So we can see there, I've got a clear picture. We knew that the Fed was going to come out and do a press conference. So we've got a clear picture there that across all the major indices, it was a move higher, but it all happened around about that 2 p.m. when that press conference started. And that turned a negative into a positive across every index. Then look at the futures. Give me an idea about whether there's follow through or not. And when we opened Asia this morning, it was flat. But as the day has started, it's just moved its way nicely higher. Of course, while we're here, we're going to check, just double check on the VIX, and we'll just check on what currencies are moving. And we can see here the yen is weak, US dollar's a little weaker after a weak night, and you can see the commodity-based currency is doing well. And we know why the Australian dollar is doing well, because we next have a look at the economic data. We can see that employment change number came out about an hour ago, and you can see it's slightly better than expected, both in terms of rate and the change. We've got now a bulletin, that might be interesting. But then we can also see what else is going on today. So we can see that there's the trade balance numbers from the EU, not dramatic. Bank of England interest rate decision, not dramatic. But the policy summary will be interesting. And then, of course, as we move into the US, we see that the weekly jobs number now. So what do we make from that? So we've ascertained that the US equities bounced on the back of some really quite mellow Fed news. We can see what the day is holding. We can see there's some follow through. We can see that there's medium risk later in the day. So for initial FX positions, it wouldn't really matter. And we know that the currencies that are performing well today are the commodity-based currencies, the currencies that are performing relatively weakly are the USD and the yen. Now we want to see some news behind that just to check in, so we can pop into CNBC and see the headlines. Now this requires, so you can see there the US and Asian markets. We can check what the other Asian markets are doing while we're here. We can see the Nikkei is romping ahead. The Kospi is doing very well. The ASX is surprisingly flat. But we can see there the major headline. All of this other stuff, remember, everything that you see here is already priced in because it's news that's happened, but it's good to know what the major if there's any drivers of the market that have had headlines. So things like stimulus package, interest rate, obviously yield, treasury yields have been the order of the day over the last 3 or 4 weeks. So we can see where we're sitting in terms of what's driving or what's happening to the key drivers of the market. And if you have a look at this every day, then you get to know that you get to ignore all this sort of stuff and focus on what happens here. So that's what happens to give us this picture. So then we can sort of summarize this in terms of news. Okay, so we saw all the equities in the US positive as the Fed's calmed the market nerves with that 10-year with the press conference, and the 10-year yield drops and has calmed markets further. And what that means essentially is the S&P is back at record highs again. We saw that the US futures are trading just above neutral, but it's appeared to be having some move into them. So again, if you see that, then that potentially is maybe worth looking at a short-term index trade. We'll have a look at that in a moment. And we see Asian markets open really muted, but apart from the ASX, everything else is doing well now. So again, we've moved up in the last hour. And then we make note of the US dollar index. We know that's lower because we're going to start to have a look at charts in a minute, and then we've got a busy economic day with those things coming out. So then we have a look at our charts, and we'll start with the major indices just to get context, because we know that what happens in the S&P 500 and the Nasdaq tends to drive things. We're going to have a look at the Nasdaq data first, because this is interesting. This has underperformed the other indices of late, had that big correction of 11% when bond yields became an issue. Since then, of course, we've got a move higher. I've marked 13,320 on this as an important level, and you can see we've tested that already in trading this morning. In fact, we have over the last 3 days. But if we look at a 5-minute chart just to see what's happening now, there was the Asian Open. So we shot up, pulled back. We're sort of in a bit of a range at the moment, but the key thing that's caught my eye is the 10, the 20, and the 50 potentially moving out at EMAs, all potentially moving higher. So a break above that, and this could see us push back up to test record highs on the Nasdaq. Of course, the S&P 500 is still there. Is already there. So we'll have a look at that. And you can see there's the record highs and some follow through in Asia, that positive start to the session. And I'll just put this on a 15-minute chart just to show you in a little more detail what happens. So this is pre-Fed, pre-Fed, pre-Fed. Markets getting more and more nervous as that press conference comes closer. So let's put on a 30-minute chart. But you can see the impact of the Fed. So up nearly 1% on the back of that, and by market close, looking very well. And if we look at what happened to some of the currency pairs, let's look at the Aussie dollar US. So in the same time period, we moved up 95 pips within, 45 minutes. So you can see how popular that was. Now, while we're here, let's just quickly look at the US dollar index. Here's the daily chart of that. Now, as market tensions about the Fed were starting to rise, and about the market response, or the bond yield response to what the Fed might say, was increasingly becoming concerning. We saw the US dollar creep up. That's all been removed in one hit overnight. We are slightly higher in Asian trading today, which is interesting because, of course, equities are higher as well at this stage. So what does that mean? Well, it means that we've essentially reversed everything with the USD, so we should see that in the US dollar pairs. So this is the next thing we do. You can see already from that futures, we can see the commodity-based currencies are strong. The euro's looking okay, the yen and the USD are weak. So if we have a look at the USD yen, how weak is the USD and how weak versus the weakness in the yen? Well, we can see there that there's weakness in the yen. You can see that move higher in US dollar yen this morning. Not an insignificant move for this time of day. We've only been open a matter of 2.5 hours or so. So we're not, we are quite surprised with that. So what does that say? Well, it says that we can look not only at things versus the USD, but we can look at pairs versus the yen as well. There's where the opportunities might be. And of course, we look at those currencies which appear stronger in Asia today to try and get the opportunities. We are going to quickly look at, there's the Euro USD, and again, there's that post-Fed response. Interestingly, this has dropped off over the last hour. But on a daily chart, you can see possibly why that is we've got a double bottom there around about this 120 level. So really, that's pretty critical. So though we got that strength yesterday, we're not getting that follow through in Asia today. However, if we look at the Aussie US, there we've broken a key level, as you see, at 98 cents, and we've had that strong session in Asia. Took a little bit of a trade here. Now you can see it's starting to level off a little bit. The employment data, this was the employment data candles. So the response to that, we can see we're rejecting moves to the downside. And we also saw, if we just put the Kiwi USD on, there we go. So there's the 50-minute chart again. So you can see that we had that strong move up last night. A little bit down initially in Asia, but not looking particularly compelling. So we've got a short-term support at around about there. Again, there was the opportunity to take some profit on that short-term trade. But now we've got a couple of really nice lines in the sand at that point and that point. So 72.55 to the upside, 72.39 to the downside. And if we put that on a daily chart, you can see why this level is important here. Again, we've got a double bottom type of formation on this. So we noticed that the yen was weak, so let's have a look at that. Let's have a look at the New Zealand yen. There we go. There's that breakthrough at 78.78, trading towards the highs of the session in Asia, though slightly sort of, if we look at the last sort of, we had a little bit of a pullback with people taking profit, short-term traders taking profit, and now we're moving higher again. And bear in mind, this is this high low, not a compelling candle. To suggest we may pause here for a little while now. Most of the Asian action will already be priced in. Most of the data has already come out. So that might be the move. Remember, the biggest moves are on Asian Open, European Open, and then US Open in terms of the financial markets. We could see this drift higher if there's continued yen weakness. We didn't mention the GB pound USD, but there you go again, same story. We've got a nice line in the sand again. If we put this on a chart, it's more like a reverse head and shoulders type pattern. There's a shoulder, there's a head, there's a shoulder. And so we're looking at 139, or let's say 140 on this as our key level to get interested. So if we put it on here, we can see that there's that big move up overnight on the short-term chart, and we're looking we're looking as though there's just a little bit of a coming off of this. Maybe that's because of that USD just slightly pushing higher than it was in early Asia. So again, we can have a look at a couple of things. We'll see the Aussie strong, we'll see the GB pound weak or weakening. What does that mean? Well, it means there might be an opportunity GB pound Aussie dollar. So again, if we look at the daily chart first, so although this doesn't look much on a daily chart, and probably for long-term traders, you wouldn't get interested in this, but you can see there is a 80 pip gap between where we are now and the next key level, which I've marked at that point there. Been resistance here, support here, and lots of price action going on around there. So does that create an opportunity? Look at the 30-minute chart. Let's just take it. So you can see this is quite a considerable low as to where we've been in the last few days. So this is a low we haven't seen for a couple of weeks. So we're just going to pop it on a line chart for a second. You can see the low. Whoops, we can't. If we put the line there, we can see the low there. So that might be the level that we get interested in this. To pop it back on here, bring it back up. And so now we have a potential entry, a potential stop, and a potential profit target. And that would be maybe 28 pips stop and possibly 65 pips profit target. So what I've tried to do there is give you a step-by-step guide in terms of my process, in terms of how I get that to the point of being able to write that news thing. That should take me no more than 5 minutes. And once you get into the habit, we talked about this in the circle last night, once you get into the habit of doing this, it's part of your preparation for trading action for the day. And even if you're sort of working and stuff, if you can invest 5 minutes in just doing that right at the start, then that might serve you well. Aussie yen, how much is left in this one? It's a good question, Ross. I've really traded this hard over the last. So there we see Aussie yen. You can see it pushing up again. So we've got a nice level at around about 85.38. Now, if we take this back to the daily chart, the problem is there's very little reference to pin this on. Even if we go monthly chart, you sort of right back to the early part of 2018, really. So if we look at that, that's really the next key level on the weekly chart that we'd identify somewhere around that 87.56. That's way too high for a chart there. So we'll put a line there. And why do we put a line there? Well, you can see there's a little bit of price action around here on the monthly chart, but that's the monthly chart. So we're really struggling to find a line in the sand. So there's two things we could do. We can either do what we've done, go right back. So this is what it would look like. Okay. So we can go right back to weekly or monthly to try and find some key levels. Or what we can say is, well, look, logically, this will be where I would play this. So there's our level that we're looking at right now, because it's pushing up hard against that. You can see that on the 5-minute chart. But we're going to be patient. We're going to wait till it breaks through. Of course, if it does break through, then we've got a nice stop in place around about 50 pips below. And so we've got a couple of choices. We could either say, right, if we've got 50 pips below, we're looking for 100 pips to the upside. Okay, and we do a 1 to 2. And that doesn't look bad from a couple of reasons. First of all, obviously, we've got a high ATR at the moment because of what happened in the last few hours. So let's say, so between there and there is about 18 pips. So the ATR on this is 18. So we're putting our profit target about 18 pips below. Maybe want about 9 pips above that. So we're looking possibly at 94. Maybe even that's too far as a risk level. If you want to get slightly tighter on this or trade a slightly tighter time frame, then logically you may have a stop somewhere sort of around here. Go to the 15-minute chart to place your stop, trade the 30-minute chart, and now you're risking 24 pips, which is sort of probably nicer. So maybe go for a 50 pip win on that, sort of 1 to 2. Does that help, Ross? Does that sort of, again, what I'm trying to show you is process in all of this as well. Okay, so with that being said, what we'll do is we'll just quickly, we saw the ASX was underperforming, and that's a little irritating. Okay, I've just got to be honest about this. I'm a bit irritated by that this morning, but it's only 0.27 down. Okay, but nevertheless, why isn't it up when everything else is up? That's the question. And I know good unemployment data. Well, there's a couple of reasons why. First of all, the banks are a major drag on this. Remember, the banks were one of about the only sector that benefited when bond yields were going higher. So if we look, first of all, we'll look at the advances versus decliners to give us a feel for the market. Okay, not interested in our website being visible, but you can see it's about half and half. Okay. ASX end of quarter expiry, 5 trades for 5 wins. That's fantastic. Is that with Magnetic, John? Or is that your own stuff? Good luck. That's fantastic, John. Awesome. Maybe have you on to, maybe have you on an inner circle. That's great work, mate. Oh, just a Magnetic Trader talk. They're going to be the inner circle guys. Don't miss that next week. They're going to go through. They do 7 different types of trade. and they're going to deliver one of their, I think there's 3 which are to do with end of quarter, so they're going to have a look at that in next week's Inner Circle. Okay, so if we look at what's not working, well, we can see straight away ANZ slightly down, not significantly so. Oops. You know, you can't because I haven't let you see that yet. Sorry. Okay, let's just try this again. Oh, yes, we are showing it. Okay, so we can see ANZ down a little. Afterpay are thinking about it, but we can see Bendigo down 2%. We can see Bank of Queensland down 2.5%. We can see CBA, guessing are down as well. Yeah, there we go, down 1%. So what we've got is a banks not doing so well. If we look at resources, BHP are down, FMG are up, Oz Minerals are down, and Rio are down. Okay, so all of the major resources are down. So you've got your 2. If we look at this at the bottom, that's a sector breakdown of the ASX 200. You can see that financials and materials make up almost half of the entire index. And so if those 2 sectors are going down, then we're not surprised to see the whole index struggling. So it's not all doom and gloom as that initial number may suggest. So let's see what's doing well. Well, Xero's come off a little bit. So the business stocks are not doing well either. So Xero, Zip, Afterpay, all looking a little shaky. There's Westpac down as well. So what is doing well? Well, we talked healthcare. Where we talk healthcare, we talked healthcare yesterday. Sonic are unfortunately not playing the game, but we'll have a look at a chart of that. Qantas have regained their, albeit a minor move up, but we'll have a look at a couple of the lithium stocks as well, which seem to be getting lots of airplay at the moment. Gold stocks are obviously doing well. Now, Macquarie has been one of our picks over the last couple of weeks, so we'll have a look at that chart as well. And LYC, I actually removed this yesterday just to remove a bit of risk. Did quite well, but we'll have a look at a chart of those as well in a moment. And we should see, yes, that we've got strong performance in retails. Look at JB Hi-Fi and maybe even Kogan. Yes, there's Kogan as well. So the retails are doing well, and of course, that's a reflection of that strong employment number. So now we've given ourselves some things to have a look at with the ASX. We've got that picture of what sectors are moving, what sectors aren't, so we know exactly where to target. So if we go back to our charts, and let's just start to have a look at some of those. So we're sort of hopeful about APT. I'm actually in a position of this, but you can see it's really not catching the world alight. So that's sort of interesting, although it is well off its lows for today. And it did this yesterday, dropped down at the start and then moved higher. But it is looking triangle. I was probably premature on this. LYC. LYC looking interesting. This is one of the reasons we took this off yesterday. I told you I was in this on Tuesday, but it is trading near a key level of around about 635. That was enough for me. So if we do get a break, there's a potential move back into this technically with about 3.5% up there. Macquarie Bank, MQG, this is the one, this is the bank we like best for right now. You can see how that's moved up despite the rest of the sector moving down. And this will represent a new high close. And you can see that although we've been up here before, in terms of intraday action, this is actually the high close. It's 152.46. So I think when we met last time, we suggested that that's the aggressive entry. The more conservative entry would be a move over 153.19. Simply because that was intraday highs. But undoubtedly, you can see the momentum coming into this and looking pretty strong going forward. Now, I mentioned lithium. There's a couple of stocks that were, Galaxy were one that I had a little poke at yesterday. You can see it's moved higher. It moved higher again. So that's one of the key lithium stocks, and you can sort of see why on that chart. If we just sort of pop it here, there was the level that looked interesting, and I just got caught a little bit, just dropped off a little bit right at the end of the session. I'll put a stop loss down. I got 20 EMA. There we go. Okay, so so that looks strong for a potential move up to around about 283, which would be 9%. Now, obviously, the lithium story is backed up by the electric. It's all about the electric cars situation, which, of course, is big globally. If you want another one to have a look at in that sector, it's PLS, Pilbara Minerals. Thinking about it. But there's the level that we're looking at with Pilbara Minerals. So 112, even a move up to around about this sort of 123 would be a push up of around about 11%. So there's a couple of things there that are looking good. And of course, we talked about Qantas. Qantas looked as though they were going to tip over potentially. And it was one of those ones that I wasn't sure about yesterday. Should it be taken off or not? But as it's taken off about half of the positions. And we've got a positive candle today, although off its high a little bit. It's we started lower and we're moving higher again. So where this finishes today is really quite important. We saw what happened a little while ago when we had a similar sort of candle at the top. And it may be that this is just starting to reach a short-term peak, which I thought could be as high as there, but there's actually quite a lot of action round about that level there. So it could be that 550 odd is a peak on this. So that's part of my consideration. If we use the, we've talked about the MACD signal line potentially. Just pop that on. It's a 10 and a 20. You can see that is still staying at this stage, but we've had a nice run on that. So anything else you want me to have a look at, guys? Just type it in if there is. I know there's a couple that you guys have been interested in over the last couple of weeks or so. So Webjet, not really doing anything for right now. You can see it's sort of stuck at around about 615. So I'm putting the pivot high at 635 as a potential next area of interest. PTM. Platinum Asset Management. Not one I'm familiar with, but we'll pop it on anyway. We're just going to get rid of some of these lines, I think, that are just starting to get a bit out of control. A very nice chart. So essentially, we've had a pullback here. We've had a move up. We've had a thought to think about it. This candle looks very strong. Quite a mover and groover. So you've got an ATR of 39 on this for a stock that's only trading at 511. So expect a bit of a wild ride. But if we just take it back on the weekly chart, this level that it's broken through or breaking through right now looks quite important. You can see how it was tested here. It was there. It was intraday tested there. So quite a lot of action around this price point. So if we do hold this and maybe just push even a little higher, my only thing with this would be in terms of upside, you might be in and out of this pretty quickly, but that's 6 or 7% to be had there till the next key level on the weekly chart. So that's a good chart to have a look at. Thanks for that. Okay, VOC just seems to, was the other one that just seems to keep on giving a little bit here, but it's just, oh, what's happening to this chart? Let's forget that. Oh, there we go. That's a weekly chart. So there's obviously been a move up and then a flat line since then, so we'll not be worried about that. Wally Parsons were one that seems to be doing well today, but that's really recovering. So what we, after a pullback, so what we're looking for here is a break of 11.21, but a candle that's more convincing than this one here. So we want to close. We've had a couple of forays above that. We're now made our way back up to it again to give it another stab. And you can see now that 200 MA was resistance, and now it looks as though it could be support. We also talked retail looking strong on the back of those unemployment numbers. So we'll look at Kogan first of all. This appears to have a little bit of a rounded bottom type of shape going on, possibly a little premature on this. We'd like to see it at least close above those highs there at 1441, and I'll really be profit targeting that 200 MA there. If we look at JB Hi-Fi, looking strong. We actually suggested that this was a good level there to get into last week. Sure enough, that has happened. It would have exceeded our profit target, of course, at this stage. So what we've got is a couple of lines. Last time it was up here, it traded within a range between here and here. Okay, that's where it was. So up 52.25 to the upside, 50.84 to the downside. We're now back into that range. Probably not enough to be made up to 52.25, but after that, we could see a spike higher again in that. Looking at the US, just a couple to, oh, did we look at OIC? Can't remember, yes we did. Looking at a couple in the US, we still like this space a lot. Micron Technology is our, sorry, I didn't do a chart of the day for Australia. I'm just going to get rid of these. I'll do that in a second. MU is our chart of the day in the US. These are all-time highs again. Still shortages in microchips, and we see that really strong candle yesterday. We like where the Nasdaq is, so over that we also looked at Apple, because we haven't had a look at those for a long time. And too early again on this, I will be sort of looking, and although it's a nice bounce, technically it makes sense to look at somewhere around that 127.88 mark. After that, we could be up $10 fairly quickly. We also looked, we've been talking Caterpillar. Caterpillar was our US chart of the day on Tuesday. That just continues to go from strength to strength. Just make sure we've got all the update. So that was Tuesday's trade of the day, and of course it's popped up another $5 or $6 since then. So that's still looking strong. And let's pop and see how our mates at Microsoft are doing, because we did talk about this as well. And there's the level we're looking at 236.91, which it's tested yet last time, but dropped back a little bit. Oh yes, BlueScope. That was the other one. BlueScope were looking pretty hot to trot, but have got stuck. Right, okay. Do I have David? Wondering whether you have a view of CFDs over options. Yes, I do. Okay, so each have their place. From a, if you're just trading directionally, so e.g. bought calls or bought puts, it's not really different than going long or short on a share CFD position. You're directionally trading. If it goes your direction, you do well. If it doesn't, you don't. The only thing, of course, with CFDs is there's no expiry, so there may be a slight edge over that. The other thing is liquidity. If you were to trade the ASX options, there's probably only, in terms of liquidity and the spread in options pricing, you'd probably be struggling a little bit. However, if you do it, the advantage of options is the multiple different strategies to take advantage of different markets. So if you've got stocks and you want to sell covered calls over the top, the ASX would have been fantastic right now. In fact, for a few months to do that on. If you're doing spreads again, ASX would be fine, but again, you're just struggling a bit with spreads. So US options, US options are a good place to be if you're going to trade options, because you've got not only the option to, or the alternative to trade multiple strategies, but also the liquidity that you need. Maybe one day, maybe I'll ask it on Inner Circle. Maybe I'll do a sort of overview of options trading. I used to teach it a lot. So if you're just trading directionally, possibly share CFDs are in a good place. Anything else, then options will work for you. And of course, there's nothing wrong with doing a combination of the two. Right, charts of the day. Macquarie is it on the ASX. So we're looking for a close just slightly above where we are now. And in the pairs, then so Aussie yen is just starting to tip over a bit. So we like the Euro Aussie. Can't remember where to do that, so I'm going to have to create it from scratch again. Sorry, it was the GB pound Aussie, wasn't it? There we go. So the GB pound Aussie is our FX chart of the day with a potential. That's the level we got interested in, as we said before. No worries, David. You're welcome, mate. Okay. Anything else you guys want me to have a look at? DAX moving ever higher. Expect a big move. It's already been priced in to some degree. We'll look at the daily chart. You can sort of see there was the level we thought was interesting last time we looked at the DAX. And of course, it smashed through that with a vengeance, continues to be at record highs. You see the futures there looking very strong, because remember, of course, in the US, what we had was a fairly miserable first half of the session, and it wasn't until Fed Chairman Powell got up and did his thing that we had that major bounce of 1%, so completely flipped around where we were prior to that. So the European markets were already closed at that stage. That's why if we go back to the futures, go back to the futures contract there, you'll see that the DAX is expected to go up 1%. Now, we may get, try that again, Mike. We may well get some follow through and see, it's almost like because these will respond to this. And it may be that one of the things I've been trying for a while is if there's an early positive move into US futures, if you see them moving up in early trading, then you can almost, then it might be worth or it certainly looks as though it's been not a bad trade to have. And then you look at what the response is on European market open. If it goes down, you'll rip it off. If it goes up, you'll hold it and try your stop up. So you're actually using market action to perhaps trade the indices based on the major liquidity times. But just watch it when European equity markets open, they are very, very choppy, particularly the DAX. But it's an interesting one. So this is not trading those, it's trading the US indices as a response to those, if that makes sense. So responding to Asia, move up in Asia, make a decision at Euro open, make a decision at US open. Of course, just for those of you who haven't recognized or maybe only touched base with the US occasionally, the times have changed. It's now 12 hours between the New York and Perth and 15 hours between New York and the East Coast, which means you've always had a trouble on the East Coast accessing the early part of the market. But it does mean that it's shifted forward an hour. So you're opening at half midnight, but it does mean that also that your market closes now at 7 rather than at 8 in the US. And obviously that'll get worse once the Aussie, or once the East Coast, once we're back onto away from daylight saving. Okay, guys. Well, look, I can't see any more that you want me to have a look at, so I hope that's been interesting, useful, going through the process again of how to create that market story that's going to put you in that optimum trading state or help contribute to that we talked about yesterday. You too, Ross. All of you have a great rest of the day. We'll see you on Tuesday, and as I said, please don't do anything too strenuous this weekend. Enjoy it. It's going to be a bit of a stinking hot one in WA, but we'll get under an aircon and we'll all be good again. So take care of yourselves, trade safe, see you again. You're welcome, GG, and we'll see you again very soon. Bye-bye for now.